Joining me here in the Gherkin is Michael Bruce, who's Chief Executive of Purple Bricks, an estate agent that lists property on Zoopla. Also with us is John West, who's Equity Capital Markets Editor for Dealreporter. Welcome to you both. Now, interesting this, Zoopla. Is it wildly overpriced?
I think it could be. Certainly when you compare it to its closest comparable in the market, Rightmove.
Rightmove,
yeah. I mean, that's trading at 24 times roughly its operating profit. Now, if you take that multiple and apply it back to Zoopla, you end up with a valuation somewhere in the region of 830 million, which is, some 17% lower than the billion figure that's been mentioned.
And of course, you already list on Zoopla.
We do.
And you actually have the option to buy shares. I mean, it's not exactly an IPO, is it? Because it's really only a select group who will have an opportunity to buy shares, including the estate agents who list with it. And you're keen to be an investor?
I would be keen to be an investor. I think that there's some growth potential in Zoopla. I also think that what's interesting is that Zoopla comes to the market with twice the revenue that Rightmove had when it came to the market, twice the profit that Rightmove had when it came to the market. And if Zoopla in any way replicates any of the good news that's come from Rightmove, investors will earn very, very well from it.
But isn't this just a case of trading off two bubbles here? We've got, tech stocks doing very well. We've also had the housing market, need I say, doing very well as well.
Yeah, and of course that's been massively supported by the Chancellor's Help to Buy policy. And already we've seen the very beginnings of moves by the Prime Minister just to slightly row back when we saw the ONS figures a few days ago about house price rises, I think, going sort of up 10% in the last year. So some of that support might fall away, and that again could eat into the equity story for Zoopla potentially.
So is it just a case perhaps of estate agents and other investors cashing in on these bubbles while they can?
I think that could be one option, but I don't think that's the case. I think ultimately with Zoopla they've built a very good business. They've started to develop that business very, very well. Their revenues double over the last 2 or 3 years. Their profits are double what they were. So they've grown it very, very well, and they're now at a stage where they think that it's ready and available to go to the market.
Yeah, you're nodding at all that, and of course Zoopla's got quite ambitious expansion plans beyond this as well.
Sure, and there's no question as well that they have some competitive advantages over, for example, Rightmove. I mean, they are, Zoopla is really a sort of aggregator of data as well as a place for people to list properties to sell, in the sense that if you want to see how much your flat is worth or something, you can input some data and create an indicative valuation off the back of it, and that creates a hugely valuable data set that Zoopla has. So it's an aggregator of data as well as just a proprietary offer of data.
Of course, you've got a very interesting business model because you're very much, a low-cost estate agent.
Yep.
Surely, if Zoopla floats, the pressure from the shareholders is you have to keep bringing in the profits. That means the subscriptions it charges the likes of you rises quite sharply. Doesn't that threaten your very business model? Well,
I think that the likelihood of that happening is not as great as you might first think. I think ultimately they've got to compete. They've got to compete in a market with Rightmove. Next year there's another online property portal coming into existence called Agents Mutual, which is predominantly built by agents. So that's looking to compete with the likes of Rightmove and Zoopla. So there will be price competition there. So ultimately, I think that from my perspective and from my business's perspective, it's what's important for the customer. And Zoopla provide lots and lots of leads for estate agents, and we benefit from that.
And of course, we were just saying, this is one of a raft of flotations that's been announced, well, today in particular. It's been pretty crazy. Is this slight fever?
I think, yes, there is, but we're beginning to see that fever turn into something of a slightly nasty illness. I mean, we saw, obviously, Fatface pull its IPO. I mean, that, I think, was a very specific case. I'm not quite certain that means the bubble has burst for IPOs.
Right.
Fatface had some branding problems. I mean, even just asking people before I came on air, what do you think of Fatface? And people think, isn't it the surf brand? Actually, they've been trying to row back, if you'll pardon the pun, from that from that brand image for quite some time now. And although actually it's a very well-run business, and they've managed to massively improve the operating side of the business since the nadir of 2009-2010. There's no doubt that the brand hasn't really entered the consciousness, and the company sits in that mid-market. Investors like either discount players like B&M or they like high-end, high-margin luxury goods. And fat face, much like Debenhams and Marks and Spencer, sits in that middle and slightly unloved area of the market at the moment.
What about BMM? Because you mentioned it there, and it's got Terry Leahy chairing, of course. We know him for, you know, that one shop fits all needs.
Sure.
But this is very much a niche discounter.
Well, I think that discounting is in. I mean, there's been a little bit of jitters about Poundland, which listed, of course, itself quite recently in the same sort of segment, a discount retailer. Yeah, okay, the share hasn't done so well in the last couple of weeks, but it's still, you know, it listed at £3 and now it's at £3.23, so it's not doing too badly at all. I think investors are still very keen on discount retailers because although we are in the midst of an economic recovery, during the crisis, consumers became price conscious and they remain that way. And so there's still plenty of growth, I think, for discount retailers, and investors see that.
And for the housing market in general, I mean, you know, things look like they could be, as you were saying a little bit earlier, cooling down a bit once the government has its way. Is that a risk that worries you for your business in particular?
I think it's always a risk that exists. I think a lot of it's hot air, though. I think ultimately...
What, the bubble or...
No, a lot of the noise that we're hearing from government and things like that, I mean, it's coming close to elections and stuff like that, so you often hear noise about things that are ultimately going to prick up the ears of voters and things like that. So I think the bubble, it does exist. I think it's very concentrated around London and the south. I don't think it exists across the whole of the country. And I think people will always continue to move and we will always continue to service those needs.
In the meantime, housing and IPOs, it's all fever pitch at the moment. Gentlemen, great to have you with us. Thank you.
Thank you very much.